Yeah. Yeah, yeah. Oh, yeah, 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 yeah. Woo! Yeah. Early mornings before the sunlight, house still sleeping, screens already lit, one desk, one plan, every click gotta mean something. Born in the garage, one outlet, one extension, pressure taught discipline, not talking, just intention. No suit fed my confidence, no hand-me-down plays. Bills on the counter taught me risk has a face. They said trust the system, I trusted the work. Every loss paid tuition, every win left a scar. I heard a cricket in the quiet, steady chirp in the dark. Like patience beats panic when you're playing it smart. If I eat, that's on me. If I fall, same name. From the people for the people, no shame in the gang. This ain't Wall Street. This right, hey. Bang for the buck, move slow, move low. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. I don't chase green candles, I monetize waiting. They the working daily while they guessing and praying. Risk defined entry, exit already mapped. Know what I lose before the order gets tapped. Premium stacking, structure over sensation. Volatility, paying rent with no conversation. I don't need direction, I trade behavior. Let emotion burn out, let the numbers stay paper. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. This ain't Wall Street, this Roddy. Bang for the buck, move slow, move low key. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. Raj, cricket, patience built in the minutes. Risk known, I don't trade what I don't own. Not for everyone, let's keep it exact. Pressure make diamonds, not internet caps. No handouts, no hero, no suit to impress. Just structure, discipline, time doing reps. Roddy the method, remember the name. From the people, for the people, but not everyone plays. Born in a garage. Born in a garage. Yeah, born in the garage, inspired by cricket. Built for the people, but not everyone gets it. Born in a garage. Meet Rod, more bang for the buck. Wall Street suits, your time is up. Meet Rowdy, more bang for the buck. Meet Rod, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born plan, average Joe, taking a stand. Roddy's the method, R&D is the man, R&D is the man. Yeah, didn't wait on permission. I picked up the weight, phone in my hand, early hours, learning to take. Garage taught patience, no room for excuses. Every choice matters, the outcome it uses. I stopped handing the wheel, the voices I trusted, took responsibility. That's when it functioned. If it worked, that was earned. If it failed, that was mine. Family in my vision, so I stayed on the grind. This wasn't about hustle or flexing the grind. It was structure and rules I could run every time. Brody came from method with discipline attached. Built for the people who carry the weight. So meet Roddy, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born playing, average Joe, taking a stand. All D is the method, all D is the man, all D is the man. I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Premium stacking, structure over sensation. Volatility paying rent with no conversation. Wrist boxed and tight before the play even starts. Calm under pressure, John Wick with the plan. They argue direction, I structure the trade. Let volatility work while emotion gets played. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. Meet Robbie, more bang for the buck. Wall Street suits, if your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Eyes born playing, average Joe, taking a stand. Roddy's the method, all D's the man, all D's the man, is the man. Family to your head. I don't need hype, I don't need a crowd.
mind, just rules I respect when the pressure gets loud. This ain't for everyone, that's part of the design. Ready rewards for ones who take responsibility every time. Audi, Audi, Audi the method. Audi, the people, the people, the people. Audi, Audi, Audi. If you want it, carry the weight.
Good morning, everyone. Today is Monday, April 6th, and welcome back to the Roundtable. Special edition today. We're doing a beginner Q&A, very special guest, Parabolic, and of course, with the entire community who is live. You are all welcome to ask questions. On the panel today, we have Rob from StockTools.app. We have Jake, Joey, and of course, Parabolic. And I'll start with Parabolic, ladies first. Good morning. How are you today? Are you ready? Did you get your coffee?
Hi, good morning. Good morning. Yes, I did. Just a little bit slow. It's quite early here. Just I woke up at 4:30. The coffee's nice and hot, and I'm ready to go. How are you?
Good, thank you. Rob, how are you? Rob's usually ready to go. He's up and early, right?
Yeah, ready to go, man. How you doing, guys?
Hanging in. Jake, what's going on?
Bright and early. I'm ready to trade some green stuff here.
Yeah, what's this green? I don't know. I don't understand this green stuff, but I guess we'll figure it out. How about you, Joey? What's going on?
Oh, just getting up and around. Early start for me today, but doing good. Nice to see some green this morning.
Definitely. And I appreciate you all being here. Again, the focus today, no agenda, really. This is based on kind of Saturday's video. There were some questions floating around, not only about the Roddy, about options in general. So I asked Parabolic if she was interested in coming on for a Q&A. And again, we'll give her the floor with we'll start with that. Any questions she would like to start with. But before that, even Parabolic, would you like to give a brief introductions? Because options is like intimidating. Investing is intimidating, let alone options, right? So would you like to give a brief explanation of how you got started with options so other beginners can listen on and maybe get ideas of how they can get started?
Oh my gosh, yes, I'd love to. Excuse me. My options journey started with you.
That's dangerous.
A degen at heart. I was looking for ways to generate multiple income streams. I was in a broken healthcare system, very happy with my job as a nurse in ICU, but I saw that the system was severely flawed, and I just knew it wasn't the path forward for me, so I was looking for kind of a way out. I was introduced to YieldMax by Liz Cross, and she's a huge fan of yours. Shares you with all of our followers every chance that she gets. And yeah, then I started watching your show pretty much daily, at least when I was working overnights, and finally got the courage to place my first options trades this year. I believe it was just a few months ago.
Did you place your first trade with actual money or paper trade?
It was real money. I had watched you for so long. It was kind of like, okay, I'm ready to fly the nest, and I didn't feel the need for a paper trade. Plus, you taught me that more would be on the line if I used a little bit of cash, and so that's the route I chose.
Nice. Now, how long have you been trading options up to this point?
Yeah, I think wasn't the first trade in October? For some reason, I feel like it was. I don't know. I'd have to go back and look. I feel like it was October.
6 months, we'll say, around there.
Feels like it, yeah.
And you've been doing mostly the wheel strategy, right?
Well, October's when I started doing spaces on X, so it was probably January maybe. But what was your question? I'm sorry.
Oh, your strategy so far that you've been
Oh,
trying,
yeah.
mostly the wheel.
Yeah, the wheel. Yep.
Okay. And then, all right, so I'll let you have the floor now. Just if you have any questions on anything, on the wheel, on options, and I'll let Rob, Jake, or Joey, anyone could take it. I could take it. Doesn't matter. Let's just begin the discussion. Like what you can ask questions that you're interested in, or you can ask questions that you think beginners are interested in. It's all yours.
Oh my gosh, I wasn't sure who was gonna show up today, and now that the introductions, have been made, I know the, caliber of company that I'm in, and, I actually wanna hear, what Rob, Jake, and Joey are doing this morning to set up for the day. Is that okay? Question?
Anything's okay. So
Okay.
they take a while to answer. They'll get there. Don't worry.
Yeah.
We're still warming up.
Yeah.
Yeah, I don't mind going. Honestly, I'm looking at the charts right now. I'm looking at the order flow for futures, right? So I look at an app called Bookmap that like kind of prints the state of the order book and with every tick kind of thing, so you can kind of see where all the liquidity is sitting for the day. And it looks like it's going to be a green day. Honestly, I think as long as the news doesn't come around too bearish, unless nothing crazy happens over the next couple hours, I think we should probably open green. And I like to sell like I literally opened a new position on SPY on Friday or Thursday, and just sold a call against it, and so I'm probably going to roll that call ASAP. I'm guessing that's like my only plan for the day, really.
Okay. Let's see, did you call it, Cook Map?
Oh, Bookmap.
Oh, Bookmap, got it.
Yeah, it's a little intense,
Isn't
but
it? Alright.
it's
Okay.
pretty cool. It looks like a big giant heat map kind of thing of like the order book, and so the idea is like you can see where the orders are resting in the order in the order book, and then like the idea is like because it prints the state of the order book with every tick, you can kind of see when big orders come in and when they go away, and
Cool.
kind of just watch price kind of gravitates towards them usually over time, like a magnet.
Cool.
Yeah, Rob's on another level, Parabolic.
Okay.
He's like, beyond. Every time he's talking, I'm like, I'm learning. I'm like, wait, hold on, what's that? But yeah, he's
Okay.
pretty advanced. Jake, how about you? You doing anything today, or are you just in awe of some appreciation here?
Yeah. I'm in awe about Rob all the time. I learned something new as well. Honestly, it's just similar to you playing with the Roddy. Not a lot to do in the beginning of the week. Just watching to see if there's any more additions that I can do. Some of my, one or two TNAs come and due for me in a couple weeks. So I'm looking to add another TNA, but go a little further out. That's been a good generator of solid premium for me. So just looking at maybe adding a couple of solid long termers and playing out my weekly or my individual stock ones, trying to play those as much as I can this week. But not a lot of movement again in the Monday and Tuesday range.
Okay, thank you.
Joey.
Hey, yeah. So I did a lot of like rolling and management on Friday, or I'm sorry, on Thursday, I guess last week since the market was closed. But just a couple of Roddy positions that I have open, and then I've been doing a lot of zero data expiration trades on the SPX, and kind of my setup for the day on that is watching taking a look at the VIX in the morning, seeing where it's at, where the market closed last, and trying to get the implied move based on the current VIX for the day, and so I try to get a downside and upside strike based off looking at the VIX, and so that's kind of what I'm looking at today. I usually place at least one 0 DTE trade today, just depending on which way the market goes. Depends on if I'm going to do a call spread or a put spread, and sometimes if I get a good swing either direction, I'll complete it and make it a full iron condor for the day, just depending on if the market sets it up. So that's kind of what I'm watching for the morning.
Thank you. Do you on the call spread, put spread? Do you deviate outside of the iron condor, or is rolling a part of the iron condor? I'm trying to learn that alongside the Roddy as well.
So for me personally, I don't roll them at all. Usually, it's kind of, once I pick my strike, about the only management I do is if it starts going against me, I will close the trade, for a slight loss. Usually, if twice the credit I receive. So like if I were collecting like a $50 credit for the day, I would close the trade out at if it was getting to a point where it was like minus $100 or something like that. But I mean, they certainly can be rolled, but I just like to kind of keep it a true 0 DTE. So when the day's over, tomorrow is basically like a clean slate for me.
You don't want the exposure after hours overnight, right?
Correct. Yeah, because it can it can get really bad depending on news breaking overnight. It could go basically you're in a twice the worst position you were in before, right? So the overnight exposure I try to avoid completely.
I'm so glad you brought that up, Rod. Do you manage your trades within a certain window of hours during the trading day? Like you never start before a certain time, you never carry the trade past a certain time? And then also, do you do more than one in a day?
So right now, I usually just do the one trade. Like I said, if the market will set itself up, I'll go from a put spread or a call spread to make it and then make it an iron condor by just selling the opposite side. But I usually don't place a trade, within the first 30 minutes of the market open. So I kind of try to get a sense of direction, based on that first 30 minutes. And then I will close the trade out early. If I get to about a 60% profit or so, I will close it out then. But I do let them run to expiration too sometimes. There is a lot of gamma risk with it being a 0 data expiration though. So I know a lot of people, they have rules where they're not open, they'll close the trade before the last hour or the last 2 hours of the market being open. And that's just kind of like a hard rule for them. But I'm a little more flexible on that myself.
Got it. Got it, Joey. Thank you. Yeah, I actually have a printout on the iron condor sitting right in front of me right now. So I'm glad that you brought it up. I kind of want to ask you and Rob, how is the Trump press conference today at 1 p.m. Affecting how you're managing the trades this morning?
Something like that. Yeah, Trump's interviews can kind of be a wild card. I've had some trades that were looking really good, and he's spoken, and I mean it's put a trade completely against me so fast that it's gone completely against me. So for like a situation like today, I would like to preferably be out of my trade before that starts today.
Okay, thank you.
Yeah, I didn't even know he had a planned talk today, so that'll be interesting. Usually, and as soon as you said that, I was thinking, it's the same IV as probably a Jerome Powell day. Like anytime that happens, just IV is going to be up.
Okay. 1 p.m. with his generals today. I thought it was going to be focused on the rescue, the search and rescue for the pilot, but it also might bring up the deadline for the
Right.
I don't know, the deadline for the ceasefire or whatever that he's placed on Iran. He extended that to 48 hours, and I think that 48 hours is up tomorrow at 1 p.m. if I'm not mistaken. But let's
Sorry,
see.
1 second. Sorry to interrupt the momentum here, but real quick question from Sergio. What is a zero DTE anyway? I think we said it a few times so far, right? So for those listening and watching later, Parabolic, this is even to you if you want. What is a zero DTE? What are we talking about here, right? Don't all jump at once. That's for anyone, by the way.
Yeah, it's oh, sorry. Go ahead.
Oh no, please.
I was just gonna say it's an option that is expiring today. Yeah, it's expiring the same day.
Is it considered a degen play?
Yes.
That's a good question.
Yeah, it's just riskier. It's a lot riskier, right? So there's a lot of gamma on the 0 days to expiration trade. So yeah, I know this is supposed to be kind of like a beginner's one, so I don't want to get too deep into the Greeks, but the idea is like price can move a lot faster on these options on 0 days to expiration. So buying them is usually pretty risky. So a lot of people sell them, but selling them can also be risky if it goes against you. As you know, you can very quickly be on the wrong side of the option and then have to be forced to either buy 100 shares or sell 100 shares, and you may or may not be holding those 100 shares at the time. So
all right, so zero DTE, that you have to start the trade and end the trade on the same day, right? You can't have it overflow into the closing into the following day, right? So that's one part. The other part is what? Obviously, it's only applicable to certain stocks. For those of you here, because I think I saw another question of what do you trade zero DTE on? And Jake, I don't know, do you trade zero DTE, or any of you guys, like what tickers do you use when you do zero DTE? Is it only one ticker, or is it multiple?
I do not trade zero DTs. I'm enthralled with the progress that some of the folks are making. So I too am listening a little bit to that. The quick spreads in and out. I find it fascinating, and I don't know if there's Rob calls it high risk. If there's a low risk to it, if you go way out in the on the strikes, can you make it a reasonable risk where it's okay? I don't know.
it is possible. Like I was doing. Like I was buying a straddle, which is buying 2 long options. I was buying a long call and a long put. I'll do this when VIX is low, but VIX has been super high, so I don't have one on right now. But the idea is you buy a long call and a long put 90 days out, so the theta decay is a little bit lower on the long options, and then you can sell those iron condors short dated, 0 to 1 DTE, so that you have some directional support if it does go against you in either up or down. I don't trade 0 DTE. I usually will sell 1 DTE. It's like not that much of a difference, but it gives you a little bit of time and a little bit of wiggle room to roll up and out, or if you have to.
Okay, so what? I'll just ask Joey real quick, and then we'll move on from zero DTE, because to me zero DTE is kind of advanced, right? For the beginner. But Joey, is there only one ticker you trade on zero DTE, or do you do multiple?
So primarily the SPX, but I also trade the mini version or micro version of it, which is XSP. It's just 1/10 of the SPX, but those are primarily, or those are the only 2 zero DTE trades that I've done. But they're zero DTE option chains on the major indexes like the NDX, and which is the Nasdaq 100, and then also the RUT, which is the Russell 2000. And then there are ETF equivalents, IWM and QQQ. So and then there's a few others like the VIX that you do is a zero. It can be, or I don't know if no, I don't think it can be a zero DD. It's a weekly train on that, but yeah, that's SPX and XSP are the only two that I do the zero DT trades on.
Sergio feels like he's in Vegas and we're playing poker. Should we play poker instead? Maybe we should, right? But sorry, Parabolic. I'll let you resume.
Oh, great questions, and I'm glad that you're moving on to. It is advanced, and it takes a while, I think, to pick some of this stuff up, and that trade when you add that second order to go the reverse direction, kind of to see that live blew my mind a little bit, Joey, and I just witnessed that for the first time last week. So I'm really glad you guys brought this up. And for the record, I'm an overnight private nurse, and I'm in some overnight spaces where they talk politics. I'm not personally interested in that, and not trying to, drop some, secret alpha on the politics and the meetings today. I just happened to be in a late night spaces last night. So, but Rod, so on the wheel, I recently discovered a huge error on my part, and that is that I was not paying close enough attention to my cost basis and being way too risky on letting my shares go. Do you want to share a little bit with your community about the importance of that and how to keep a close eye on it?
Sure. So I guess we could speak of entry to the wheel and how to go about it via maybe selling puts. And I'll let others chime in as they go from their experiences. But every time, and I never learn, right? Every time I start a new wheel, I'm like, you know what? I'm just going to sell puts at the money, right? And I just did it. I'm not going to lie. I literally just did it again on TSLL, and it was at $18. I sold a put. I'm like, what's the worst that can happen, right? And then, the market's been going down and down and down ever since, right? So obviously selling at the money or even in the money, especially on leverage plays, it's not ideal unless you really think the market is at a bottom. But again, to me, when I do options, I don't time the market. I don't pretend like I know how to time the market. I'm just here to generate premium based on volatility, based on time. So, I mean, long story short, when you're beginning the wheel, once you find the ticker you're comfortable with, once you get to that point, what I would recommend is, people always say the 0.2 delta. That's always a great starting point, right? I know it's supposed to represent 20% chance of assignment, but again, you may think you want assignment right away just so you can sell calls. But what if, we're getting in trouble with Iran? Well, here we go. The what if happened, right? So how can you sell calls when you get assigned at a price that is well above the current value? So, I mean, I just kind of went in a full circle, but basically, when you're beginning the wheel, don't rush it. Take your time, right? Sell puts at a lower strike price than what's there. Because again, it'll come down, believe me. I know the market's been bullish, up until maybe the beginning of this year, but it's, the cost basis thing. Yeah, you could treat that so many different ways, and I can go on and on. But to me, there's two ways. There's one, you have an overall cost basis that's based on the assignment of all the shares you got, and that's the preferred way to do it for me. And two is my backup plan is you separate individual positions or lots where you can sell calls on an individual basis based on that particular cost basis, and that way you're not out of the game. I don't know if I made sense there, but I'll let anyone else chime in that wants to.
Yeah, you did. And I just realized who Rob is with the StockTools app. Nice to meet you, Rob. And of course, great to be with you, Jake and Joey. Jake, do you trade the wheel?
I used to with Rod style, but honestly, I really enjoy the Roddy because of the cost savings. I tried to think about the wheel again, and it just is a little bit more expensive. But again, I'm thinking about jumping into it again with TSLL just because it's fun on the side. But I think, to Rod's point, I think no matter what level you jump in at, you have to have a plan, not only to get assigned and then sell calls, but to average down again in case it does go down. So you just have to plan for both movements, down and up.
Yeah. Interesting. Yeah, the thing is, Ambassador has shared with me many times about having this plan, well, a well-laid plan prepared. But when you're learning, you don't know what needs to be included in the plan. You don't know how to set it up. You don't know what the plan is even, involves. Um, I feel like learning how to create the plan comes after you've developed some experience. Would you agree with that?
Yeah, for sure. You don't know until you get screwed once, and then you just don't want that to happen again.
Yeah. Yeah, terrible feeling, and I didn't even know that that was happening, that I was making these errors. It finally clicked for me, like, "Oh, no," like, Rod said it a few times, and then I realized, "Oh, no, these shares have been getting called away." I've been like, "Oh, well, I didn't want that position, to be so heavy," or whatever. Where it made it really obvious was EOSE, and it really, uh I actually sold way below my cost basis to get out from so many of them, and I did that for opportunity cost, which was pretty tough decision. But anyway, that's when I realized, oh yeah, cost basis is super important on the assignment.
Yeah, just gonna do a quick visual of what I was speaking of earlier, right? So,
Cool.
say you sell a put, right, at TSLL at 18, like my dumbass did, and then TSL dropped, right? I got assigned 100 shares at 18, standalone. I can't do anything with those, so those are useless. So, what I now it's basically collecting dust, but I did get assigned on the way down on 14, 13, and 12, right? So I have 400 shares at a cost basis of 14.25. So again, those two decisions I mentioned. So I would sell calls either 14.25 or above, or I would treat this as a one-off, this 12, right? And I could sell calls at 12 or above, right? And that's how I would look at it, right? Because in the end, I mean, I'm stubborn. I'm not losing capital, right? I'll hold on to the shares. I'll make it work because I've played with TSLL for quite some time. But this goes for any stock. But yeah, as far as like the cost basis goes, I always either want to make either no capital appreciation or capital appreciation. I don't want to lose capital. But how I get there, it's just a basic math equation, basically. But I would say either break it off or continue to sell puts, average down, go from there.
Yeah, I would say one thing to add is when you are under your cost basis, if you are still trying to generate income from the position, you can sell a credit spread instead of just a call against the shares, right? So that it gives you a little less premium, but you're getting some upside if it does go past the short strike, and eventually, hopefully, in a perfect world, it'll go back. TSL goes up to 15. Let's say you sold the 13 call and the $15 and bought the 15 or something like that. You'd start picking up premium. You'd start picking up the long movement as it goes up past 15. Again, you'd just be kind of missing out on the spread between the two.
Thank you for bringing that up. You're right. Selling the credit spread on the shares. Joey, have you worked with that type of trading in your wheel process?
Selling a credit spread or
On shares that you owned to I don't know if this mitigates risk. I feel like it does. Well, since you're in the iron condor, I kind of thought that that selling credit spreads on your shares is sort of like an in-between type of trade. Am I looking at that right?
so Well, so the basis of an iron condor is, so you are selling a credit spread or a put spread, or I'm sorry, it's both of them. So you have a credit spread to the for the upside, and then the put spread for the put side. I don't know if that answers your question or not, or like as far as the will, like willing goes, I do use the will strategy as well, but I've actually just do that on TSL at the moment. And I haven't actually done, what Rob had suggested, like, selling the call spread to capture some upside. I haven't actually implemented that myself, but yeah, I don't know that I don't know if that works with Iron Condor. You kind of already have the call spread or a put spread in place, so I don't know if that helps
Got
you.
it. You actually helped me on that one. Thank you. Yeah, you clarified it for me. It is to capture you capture more upside. That is what Rob said. Thank you for that. So Rob, I feel like put credit put spread on some trades that I placed on AXTI would have been hugely beneficial because that thing ripped, and I did lose some opportunity there. So thanks for reminding me of that. I'll kind of keep that in the back of my mind.
Sure. Yeah, totally.
Yeah, please.
Oh, yeah. I was just going to add also that there's two kinds of credit spreads too you can do. So you can do like the normal one where you sell. Let's use TSLL, like sell the 13 and then buy the 15 or something like that, right? So you have your normal short one like that, but you could do it what's called a ratio spread as well, where you would buy the lower strike. Let's say you would like buy the 14 and then sell to 15s, or buy the 13 and then sell to 14s. So you have like a debit spread, buying one long call and then selling one short call above it. That gives you the debit spread, and then you sell another call that's actually against your 100 shares, so that when price goes up, you do capture a little bit more price movement as well.
Okay, and Rod, if you don't mind me, I know I'm asking a lot of questions here. Hope that's okay.
It's your job. That's what you're here.
All right. So for our friends that are in the chat and on X, can you and for my benefit as well, will you please briefly, like in an Eli 5, describe what the debit and credit sides are of the buy and sell orders?
Yeah, it's like, I don't know. I'm actually thinking it might be easier to just show it.
Thank you.
If you don't, and let me share my screen here.
I trade on Fidelity, and I don't really see indicators of debit and credit, so I don't look at my trades that way. It's interesting that you use that language. I know Rod has taught this, but I'm still yet to grasp it.
So let's say you have 100 shares with 100 shares of TSL. Let me zoom in a little bit here too. So you have 100 shares of TSLL, and instead of, maybe the risk graph will maybe help a little bit here. Let's say April 10th, and so interesting. Wow, it's way out of the money. Yeah, so let's see. We'll do the 12.5, the 1250 call is right on the 20 delta. So that's usually right where people like to sell their short calls. That would give you 11% up move, but then you're capped right here, right? And so you'd make that $1.10 difference between 1137 to 1250, and you would capture that 1350. So you get another 1% there. But if we add on another call, let's say we buy this one for 5 cents, sell this one for 14, you're giving up a good chunk of that credit that you're receiving, but you're also capturing upside that if for some reason Optimus robots come out and they start shipping tomorrow, and the semi trucks finally start shipping, and Tesla goes back up to 450, TSLL is going to go flying back up again, and you miss out on this little area right here, this little valley or whatever, or plateau, and then once it does hit your long strike again, it'll start going back up. Your overall position will go back up. That's just the credit spread side. You could do what I was talking about before is the ratio spread side. So you'd actually sell 2 of the short calls. So you'd buy this 1250. We'll say we'll buy this, and then you would sell 2 of the 13s a little bit closer. And I actually really don't get too much of a credit there. It's actually pretty low from a credit side, and you're still kind of capped here, but you're capped in now. If it goes up to 13, you're getting a 19% gain instead of, actually I should have probably did 2 of those. Let's see, do that pretty quick. Is that what I had? I think I had that 1250 and the 1350. All right. Oops. Yeah, so we'll see price goes to 1250, price goes to 13, or was I? There we go. Yeah, so you gain 11% on the short credit spread all the way up to 1350. In this ratio spread, if the price goes up to 13, you're actually getting 19% there instead.
Got it. I guess, yes, now that I think of it, right, when I'm placing the orders, Fidelity says net credit, net debit. And okay.
So you don't bring as much credit in. That's the problem, is if you're using this as a premium generator, you don't bring as much premium when you do this, but you're also only doing this when you're kind of underwater on your shares kind of thing, and you don't want to get stuck getting called out.
Mm-hmm. Got it. Okay. Well, I think I've got it. It's all, I think I've got it until I watch this replay a couple times at least.
Yeah. The old Mike Tyson saying too, also, right? Like the same thing with the short puts. It's like everyone's gonna plan until they get punched in the face, and then you're like, holy crap, I actually have to get assigned these shares, and now I gotta wheel these things. And
that's the way to learn, right? Losing your ass.
Oh my gosh. So can we move on to, I feel like we could talk about the wheel for several, I don't know, I could talk about the wheel all day, but would it be okay to move on to the Roddy now?
Yeah, because I think you were asking questions on the Saturday video, and I think it might be better to start with explaining the poor man's covered call and then lead into the Roddy, right?
Okay.
So I don't know who wants to take it, but I think Jake, I think you said you're doing the Roddy, but did you do the poor man's covered call before the Roddy? I'm not sure if you did. And
no.
Want to give it
No. I jumped right with Roddy. That's it.
Oh, okay. All right. So Rob or Joey, have you ever done like the poor man covered call? Experimented with that, and and do you want to explain it, or do you want me to take it?
Yeah, I just jumped into the Roddy as well. I hadn't done just traditional poor man's covered call prior to that.
Yeah, I've been selling poor man's covered call for a while. I like them sometimes, and then other times I don't like them. It depends. Same thing. It's a love-hate relationship, right?
Can you just explain the benefit of a poor man's covered call and why someone would do that versus, say, the wheel, for example?
Great question.
Yeah, so the idea is you're getting, I guess, like at its core, right? 100 shares is 100 long deltas, right? And so when you're buying a long call, you're getting those same deltas, but you're kind of renting them for a short period of time because they do expire at some point. And so when you buy, like in for poor man's covered calls, you try to go a little bit, in the money. So you usually go to like an 80 delta long call. And so you buy this long call that's going to give you 80 deltas.
I got to rewind because you're throwing Greeks out here.
Yeah, sorry.
Who's in the beginners? Let's slow down.
Sorry. So yeah, when you buy the long call, you're trying to represent, you get a fraction of the same exposure as you would as the long shares, but you're getting it at a much cheaper price.
Okay, so you would buy a call further in the money to get, I guess, closer exposure 1-to-1 as if you own the underlying. Is that?
Yeah, exactly. Yeah,
Okay.
and you it would be a fraction of the cost. It would probably be like 25 to 40% of the cost of the long shares for that same position.
And that's the real benefit, right? The cost savings, would you say?
Yes. Yeah.
Okay.
It's also the risk too. Is
And the risk is what? Time? You have
time?
to.
Yeah. Time is against you in the poor man's covered call.
Okay, so real quick, and sorry to keep cutting you off, but
No, you're fine.
we do the poor man's covered call because either we can't afford the shares or we don't want to shell out the money for the shares. And we could do, essentially sell calls on those shares without owning them. But we have a time constraint, right? Things have to work out with time. So, right, is that pretty much it? But what else do we add to that?
It takes a lot of management as well. It's a little bit riskier, right? If you are to get assigned the shares, it's not just like a automatic assignment. Everything, works out and Fidelity will close your position and you don't have any shares to sell to somebody. So if you do get assigned or you get into a hairy situation, you have to manage it yourself. You have to get yourself out of it.
Okay. And now that leads into Parabolic's question, like, what the heck is the Roddy? And Jake, it seems like you're deep in the Roddy right now. So if you're comfortable, can you explain what the Roddy is to a beginner?
Oh, that is a challenge for me. I can follow it well, but to explain it, boy, I don't want to confuse people. I'm not a
What
good
if I pull up
explainer
a
on that
visual
one.
for you? Yeah,
Awesome. Do you have a visual?
yeah, it's what I always use, my sample visual here.
Yeah.
Here, so
Oh, yeah. I took a screenshot of this on your last show. Yeah, thank you.
So Jake, do you want to try to explain the three legs?
I've never done it, so please, you do
Okay.
it. You do such a good job at it, honestly.
I'll do my best. So we talked about the poor man's covered call, right? And I wanted to talk about that first because you don't need to do the Roddy, right? You could do this. You could do what we're doing through just buying the call, right? You can get rid of these two, which is considered a credit put spread on its own individually, right? But it is part of the three legs on our three-legged cricket here, right? So we'll take out the sell call part of the equation for now, right? So again, and I'll explain it to my best ability because even I'm new to it, right? We gave it the cricket name, but basically it's a synthetic combo collar, right? I don't know, Rob, is that what you would technically call it? A synthetic combo collar or synthetic collar combo?
Yeah, synthetic long with yeah. It started as a synthetic long, and then adding on the long put kind of turns it into a collar, I guess. It's like a hedged synthetic long.
Yeah.
Like
I'm glad you asked for that or clarification because it does help with research, like for someone who wants to dig a little deeper. But I do just want to say, because I'm so new at this, that and for those that are learning the wheel, that it's really important that we start with the wheel as a learning strategy, right, and not dive into this. Isn't that your recommendation, Rod? Because
Well, it's a lot to play leverage, play around like this with synthetics, and because you can really get burnt, and I did, some of us did
okay.
already. But yeah, I mean the wheel, you can dig yourself as big a hole in the wheel too. It's really about how you're doing it, right, and how much money you're doing it with. So I mean, it's always play at your own risk, right? Not financial advice. None of us as financial advisors. It's always learning. And let's keep it at that. So, well, for now, again, so we have about, say, 10 minutes or so. So I want to try to explain this as best as I can. So we talked about the poor man's covered call. So here you would buy a call, right? On, this is IWM. This is old numbers, by the way. So don't worry about the amounts. If you at the time you could buy a call, right, for $2,700. You get the, the same similar exposure. Granted, this was not in the money with the 80 delta that Rob was explaining, but once I did this, once I paid $2,700, I was able to sell calls on IWM, right? But if I sold a put, right, how much would that cost me? $250 times 100 shares. I mean, get real here, right? $25,000 versus $2,700. Okay. So when you just buy the call, right, you're shelling out the $2,700 out of pocket. That's your risk. That's your expense. What you do from there, again, of course, you could screw it up even more through selling calls. But long story short, that's it. Now, when we add the sell put, this is the synthetic combo. This is what YieldMax does, right? This obviously offsets the expense of the call, of the long call, making it now $876, which is awesome, right? That's cheap as hell. However, now you have the full downside, exposure of this sell put, and it also requires $25,000 in collateral. So you don't want that. Again, we're broke asses. We're not shelling out $25,000. So now we add the buy put, and this is the third leg. Crap, what the heck did I do? Let me just hide the one. There we go. So now this is the third leg, right? We buy a put at 235. There's a $15 difference there, right? So again, for one contract, 15 times 100 shares, that's $1,500. So what does that mean? Well, that means that's the spread, right? That's also your collateral. So, you're basically risking $1,500 on the downside. After now you're putting up, again, you had the 876, but you have to pay for the put now. So you're putting up 2,161. So you have to make the decision. Do I want to buy a call? Do I want to put up in advance $2,700 and do it that way? Or do I want to do the three legs, put up, say, $2,100, but accept an additional $1,500 downside, right? So again, there's so many different ways to do it beyond this. This is just what I'm doing right now, and some of us are doing right now. But that's why we would do it, because there's two things here. It's cheaper, and we're kind of bullish on the underlying, right? Obviously, if we think the underlying is going down, we're not doing this, because that would not be smart. But so, and I can't afford to trade IWM on the wheel strategy, and I want to, so I'm going to do it through this method. And that's the only way I could afford to do so. And I'll pause. I've been yapping for a while, Parabolic, so I'll let you go from there.
No, it's great that we don't interrupt you while you're describing this, because it's important to get all of this in one fell swoop. Was there another component of this, another leg that you hid?
Yeah, I just kind of wanted to cover these are the three main legs. I want, again, and the reason you're doing this, right, is to generate income. You're going to sell calls weekly or bi-weekly or monthly, whatever you want to do. But
yeah, here's where my questions kind of were left off. So when you say you're selling calls weekly, you're selling calls on this trade? Because in my mind, I'm selling calls on shares I already own, but this is not shares that you own.
Yeah, as long as I have this sucker up here, this green sucker, I can sell calls on one contract if I bought a call on one contract. So as long as this exists, these two don't have to be there. They're just there to help me save money and, limit the downside. But so as long as this is here, yes, I can sell calls. As long as this exists in my account, I can sell one call against it, right? for the strike of my choosing.
Okay, and so is the buy call the poor man's covered call?
By itself, yeah.
Okay,
So, I
okay.
mean, you could really call this a poor man's what a poor man's an even a poorer man's cover call, because actually you're saving even more money. But it's got a slight degen play in it because you got additional downside risk. So again, and then to keep it simple, I don't know. I mean, you've been watching me a while. I've always said from like years ago, I'm like, I'm gonna create my own little thing, call it the Roddy. Granted, this is SB's creation, so it really should be called the SB. But I just kind of called it you know, the Roddy because why not, right? It's a fun name, and
Yeah, we've been waiting for it. Heck
yeah.
yeah.
But yeah, so that seems like you're getting stuck on the sell call, right? So
Yeah, I am.
what's the confusion there? Like, so the idea is, again, we sell calls weekly, right?
Mhm.
Because as long as this exists, we can sell calls against it, but we are on a time limit. This will go away at some point. And
Oh,
that is
okay.
the biggest risk about this, right? That is why the wheel would be better in some cases, right? Because you can wait it out.
Okay, and you're placing the 3-leg order it's a leap, and it's a leap for like how many days again? Is it 6 months?
Whatever you want. Again, each
Oh,
individual ticker, ETF, whatever,
uh-huh,
they have they only go out so far, right? You can't pick 10 years down the road.
uh-huh.
Some of them go out 2 years, even maybe even a little more. But yeah, you can, depending on which one. Some of them go way out. Some of them are not going out that far because I don't think the market makers are even comfortable because they're so degenerate plays, right? They don't know where it's headed. So, but yeah, I like to pick the furthest date because I don't want to predict the market. I don't want to rely on time, right?
Mhm.
Because again, that's the enemy at this point. So I need things to go up in the long term, and the longest term I can buy, I will.
What happens if you get assigned, um, uh, on this, on selling these calls on this order, on this 3-leg order?
So yeah, if this gets assigned, if IWM goes up to 260, 270, this gets assigned, this gets called away.
Mhm.
It basically, it
Okay.
sells the shares. So you have 25,300, but you don't have the shares to sell, right?
Yeah.
So what you do is you take this and you exercise the buy call, right? Or you could always just buy the shares outright if you have 25,000, whatever the share prices are. You can buy the shares outright. But for this position, I would exercise this, and I'd probably just close these out and then start over.
Okay, my last question, because I know you're up against the clock here. What does exercising the shares look like? What does that mean?
So when you buy a call, you have the right but not the obligation to buy the shares at this price by this date, right?
Okay.
So at any point in time, you could buy the shares for 250, right? So if it's at 270, right? IWM,
Mhm.
obviously, you're getting your deal. This is your cost basis essentially.
Okay.
However, you are capped because you did sell a call at 253. So, but you still have, you have the option time value, which you're going to make, and you'll have the $3 difference. But there is, when you click on the call, like at least on Thinkorswim, there's an option to click exercise. So
Oh, okay.
you just go to the buy call. It says exercise, and it kind of does its thing. Sometimes it's straightforward. Sometimes, believe me, this stuff gets very confusing. Like I closed out a Roddy not that long ago. I was like, it took me. I had to do every single thing individually. I couldn't do anything together, but it's still like that's how you learn, right?
Mhm.
This is it's a learning experience. For example, like I can't roll the call if the sell call is open, because when you roll, you do a buy to close, a sell to open, or I'm sorry, sell to close, buy to open on the call. so that sell to close automatically, it says, all right, you don't have the shares. You can't, you have a call you're selling. So what I had to do is I had to basically close the call, then roll this or sell it. Again, it's just, there's a lot of rules, and maybe not every brokerage is as strict with what they should be. But there's a lot of rules, and I know we may be confusing people, but does that make sense? I know I did want to make sure that you understood the Roddy. Of course, we can do a part 2. Don't get me wrong. But does that help at all? Or?
It does. It definitely does. Yeah. Yep. It's a great start.
Okay. And that kind of went quick, that hour, to be honest. But I want to go around the room before we head out and give everyone a chance to give a piece of advice, maybe to beginners out there. But before that, I just want to mention, as always, none of this is financial advice. I am not a financial advisor. None of us are financial advisors, and this video was for fun and entertainment. And again, I think we should do a part 2. I'll let you guys, and especially Parabolic, decide that because there is so much to cover. And if anyone wants to join Parabolic on the other side of the table, asking the questions, of course, you are welcome, as long as you behave, of course. But yeah, we can go from there. So yeah, we'll go around the table. Again, any quick piece of advice or anything you just want to say to any beginners, option beginners out there? I'll start with, well, let me pull up the, where am I at here? Let's hide this. Let's do that again. There you go. All right. So on my screen, I see Rob is next. So we'll start with Rob.
Yeah. Thanks for having me, as always. Yeah, I'm trying to think of what good advice. Don't do it, man.
Well,
Don't do it.
Tell them about your website. Do that. There you
go. No, it's great. I'm totally addicted to selling options and options for income and all that fun stuff. So I think it's great, but it is risky, and it does take practice, and there is just like Rod was saying of the execution side, right? Of like, sometimes you get in these positions and you're like, holy crap, why won't my broker let me unwind this thing? Or I need to roll this. Why can't I roll this? And you're all confused. And it's like saying, order rejected. And
you get the ding. Oh, but that was a bad noise, right?
Yeah, it's like, you do not have the enough funds to do this trade. You're like, what do you mean I don't have enough funds?
Yeah, it is scary, right?
It's super confusing sometimes, and it's pretty hard. So you do have to be careful, especially with these complicated ones. So if you are starting out, I would highly recommend starting small, something like, not financial advice of like which stock to pick, of like SoFi or TSLL or something, but do something small, under $20 a share, so that you can, do this without doing too much risk of losing a bunch of money. Yeah, and that's my X account is just at Robotool, ROBOTOOLE.
Yeah, and his website is StockTools.app. Go check it out. It's very advanced.
Yeah, lots of stuff in there.
And we do need more meetings. I know Ambassador started a series. I'm not sure what happened with it, but hopefully.
Yeah, I don't know. We just kind of petered out. But I'm always down to nerd out and talk about options whenever, man. So I'm happy to get on.
Okay. No, thanks for being here, Joey. Any wise words of advice? You are the dividend dream, after all, right?
That's right. Yeah, I'd say, just starting out, keep your allocation to a position, kind of in check, but don't get too heavy in one position. Like especially if you're doing the wheel strategy, try to space out. Like, if that stock continues to drop, or the ETF, don't be so quick to get your next lot of shares in. Like, if you're gonna need to average down your average cost per share, give yourself a little gap there, and don't get too heavy into something, because and always, whatever you choose, like Rob was saying, I think it is smart to start with something with a lower share price, and don't be sure you do it on something that you plan or you don't mind owning, so because there's a high likelihood that you're going to end up owning the shares at some point. So be sure you're doing it on something you wouldn't mind holding on to for a while. But I just say
price, like MSTU.
Well,
Yeah.
MST is a sore spot for me. Yeah, that actually is why I gave that advice, because MSTU, I last year in January, like when it had it had forward split, I guess, and I got way too heavy into it, and it became a big portion of my options account, and that was a heavy bag that I carried for way too long, and I just don't want, I wouldn't want to see somebody new get into that same position, because last year was a bullish year, but I had a very heavy exposure to MSTU, and it really impacted my
It's a
results
bad word.
last year.
MST is a
Yeah.
bad word around here. So
Yes.
hey Jake, you're up. Any words of advice for Parabolic or any beginners watching?
Yeah, I'd say just take it slow and understand getting in and understand getting out. Sometimes the hardest part is how to get out, and even with the wheel or even with the Roddy, it's easy to jump in and follow everybody getting in, but they're not always around when things are moving and you have to manage it to get out. So understanding how to get out I think is, for me, was the hardest part to get my head wrapped around. But having a plan on both sides helps. Taking your time and don't throwing all your throw all your money at everything at once. It's good to have a little bit of a buffer for later.
Yeah, and real quick to that point, if you do get stuck, you do get worried. Again, like I said, we're not financial advisors. We can't recommend anything. But on the Discord, under the options trading channel, if you literally just ask any question, it'll get answered. Like if you need help walking through a trade, or you get stuck, like you get those bad beeps on Thinkorswim, and you're scared. Someone's always there that could talk you through it. But yeah, because it could be scary. Options can be scary for sure. Parabolic, I'll give you the final words. But before that, are you interested in a part 2 of this?
I'm so glad you asked. Yes, I am.
All right, so we'll work on setting that up. But any final words to anyone just starting out that might be scared, or any words of advice to anyone in general?
Not financial advice, of course. Want to say thank you to my friends in the chat, and thank you, Rod, for putting this on. Appreciate you, Rob and Joey and Jake. Just hope to make you guys proud in the future. My thought would be if to start with the wheel, and when you're selling calls, keep your deltas low, less than 20, and
There we
watch.
go with the Greek talk again. No, I'm just kidding.
Yeah.
Yeah.
Well, the delta was the first Greek, the first of all the Greeks, I guess. But keep your deltas low, under 20, and watch your strike prices so that they match your cost basis, or below. That way you don't have any regret if something goes wrong.
There you go. All right. No, thank you all for joining bright and early this morning. Hopefully you have a smooth day, smooth week. Thank you all for watching live, participating live. I know there's a lot of questions in the chat. I apologize. I couldn't get to all of them. I did try to keep this beginner related, keep the flow going. But of course we will, always try to, answer them. But if you really want those answered, like I said, just go to the Discord to ask the question. Someone will answer, maybe even Parabolic, right? But anyway, thank you for watching. Appreciate it. And we will have a part 2. Stay tuned, Chico. All right. Have a good day, everyone. Thank you, Rob. Thank you, Joey. Thank you, Jake. Thank you, Parabolic. And have a good one. Later.